Let's learn together how to value inventories. Let's focus on the first word. What do you mean by valuation? Valuation means representation in terms of money. Usually, valuation means representation in terms of numbers, but in accounts, we talk about money. After you write one test, your paper will be corrected and will assign one number to your paper 4 marks, 6 marks, 10 marks. That assigning marks is the process of valuation. Would you agree? Assigning marks is a process of valuation. Similarly, when you have inventory in your godown, when you have inventory in your business, we want to represent that inventory with some value. You assign some number to it. You cannot write no how much inventory, 14 kgs. No, you have to write 14,000, 13,000, 12,000, 10,000. You have to assign some value. So assigning the value is valuation. If valuation of inventory is not done, if someone asks how much inventory do you have, like ishtu. What is ishtu? Ashtu, ondashtu, ishtu, kitna, kitna, utna. You can't write that. You should write some value. Because accounts tells no, we have to represent everything in terms of money. Money measurement principle. If you cannot measure it in terms of money, you cannot write it in books of accounts. Are you getting it? So we are trying to represent inventory in terms of money. Valuation you understood. Now let's wonder what do you mean when you say inventory? Inventory means what? Inventory means stock. Inventory means stock. It will include several variants. It will include inventory will include raw material, work in progress, finished goods. Inventory will include raw material, work in progress, finished goods. Inventory stock. Stock has multiple variants. Let's say I am selling a product. I can be a trader. I can be a manufacturer. If I am a trader, what do? I buy water bottle, I will sell water bottle. I'll buy water bottle, I'll sell water. I buy it at 100, I sell it at 120. I'm a trader. If I'm a manufacturer, I don't buy water bottles. I buy aluminium patties. Like this metal putty, like slab of it. I buy it and then I put it into one belt and that machine will cut it into a rectangle. Then one more machine will fold it into one cylinder. Then one more machine will put one bottom circle. One more machine will put one top circle. One more machine will put one hole. One more machine will put one rivet around it. I'm going to say the markings for the threading for this. And then one more machine I'll bring cap. I'll put them together. Bottle ready. And then I'll put spray paint. Bottle is ready. So that is manufacturing process. So I can either buy and sell or I can manufacture and then sell. If I am a trader, trader does what? Buy, sell, buy, sell, buy, sell, buy, sell. I'll have only one variant of inventory, finished goods. That's it, finished. If I'm a manufacturer, I buy raw material. I convert that raw material into finished goods and then I sell. For example, if I buy and sell shirt, my inventory is only shirts. If I buy cotton, convert it into thread, then weave it into cloth, then stitch it into shirt and then sell. I'll have two variants of inventory: cotton, shirt, cotton, shirt, cotton, raw material, shirt, finished goods. But sometime at the end of there, every bunch of cotton what I've bought is not yet converted to shirt. Some things are in the thread stage. Some cloth, some thread is also left with me. Is it raw material? No. Is it finished goods? No. It's between raw material and finished goods. That is work in progress. Semi-finished goods. Is it finished? No. Is it raw? No. It's in the process. It is in the that is work in progress. That is also inventory. That is also stock. That should also be valued. Did everyone understand? How many variants of inventory do we have? 3. 1, 2, 3. If I am a manufacturer, I'll have all 3. If I am a trader, I'll have only finished goods. So what is finished goods? Finished goods is items sold in the ordinary course of business for sale. Items sold in the ordinary course of business for let's take example of shirt manufacturing industry. What is my finished goods? Shirt. Let's say I am making shirt for travelers. Travelers. You understand? Not like normal people who wear it on day-to-day basis. For people who are like wanderlust, travel bug. You get it? So an inspirational character's image has to be put on your shirt to inspire people to travel like you and to tell the world that you are a traveler and you are an explorer. What more inspiring than who else is an inspirational personality than this lady who is deaf, dumb, and blind? Follows instruction of a monkey. Okay, Dora the Explorer, pink color shirt with Dora image on it. This is my finished goods. This is what I sell. But this is not what I buy. What do I buy? I buy cotton. I convert that cotton into thread. Out of the thread, I make cloth. So, for example, in the process of production is thread. I weave that thread. I'll put thread horizontally, vertically, bring them close, 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 close. When they become very close, it will become cloth. Correct? No, that's how we make cloth. Am I right? Yeah, we'll go to Gandhiji and then ask him to do. No, you can do it using a machine. Gandhiji takes too much time. Yeah, because you need to pose for the picture now. Slowly. That's the reason Gandhiji doesn't wear a shirt. It'll take time. Okay. Next one. Oh, no offense, sir. Sorry. Tata, sorry. Yeah. Okay. Next one. Raw material. What do we buy? Cotton. Yeah. Cotton. Dye is consumable. Now, cotton is which color? Shirt is which color? How will cotton of white color become pink color shirt? I'll dye. I'll dye. No, I'll put dye. Dye means ink. Dye is not raw material. Dye is not work in progress. Dye is not finished goods. Dye is consumable items which is consumed in manufacturing of the finished goods. That is also considered as inventory, but we don't have accounting for loose tools, spare parts, consumables. All of that we don't have it in foundation. We'll anyways learn it in inter. We learn it in inter. For now, Venda. For now, just remember raw material, cotton, work in progress, thread, finished goods, shirt. Now, we are using this raw material. Read what is raw material? For consumption in production of goods or services includes supplies and consumables. What is work in progress? In the process of production for such sale. What is finished goods? For sale in the ordinary course of business. Everybody understood these three? Fantastic. Now, this has to be shown, this has to be valued in preparation of our final accounts. In preparation of our, why in final accounts, when you prepare trading account, credit side you write closing stock. That's important. If that closing stock is wrong, GP is wrong. If GP is wrong, NP is wrong. If NP is wrong, profitability is wrong. Based on that, whatever decision you take of the entity is incorrect. Further, that profit will go to balance sheet. Balance sheet liability side is wrong. And balance sheet asset side you write all the assets. In that you write current assets. In current assets you write inventory. That is also wrong. Because closing stock appears at two places. P&L trading wrong, P&L wrong. Balance sheet liability side wrong, balance sheet asset side wrong. So everything's wrong, no financial statements. Based on that, if anyone takes any decision, that decision can be incorrect. So inventory should be taken in our books of accounts with precision at right value. Inventory should be taken in our books of accounts with precision at right value. If you take it at incorrect value, it's gonna cost you very hefty. So it's our responsibility to ensure that inventory is valued correctly. So in this chapter, we will learn how to value the inventory correctly. Once again, let me emphasize on what is the significance of valuation of inventory. First point, determination of income. Determination of, with wrong inventory, we will determine wrong income. With right inventory, we will determine right income. To determine income, we need to determine the value of inventory correctly. To determine income, we need to determine the value of inventory correctly. Shall we see how to determine income using inventory, or how will inventory impact the income? Let's begin. Have a look at this now. This is the information that's given to us, and using that we'll see how to find GP. You all know the formula for GP is sales minus cost of goods. Do you also know that cost of goods is opening stock plus purchase plus direct expense minus closing stock? In this, if closing stock goes wrong, then cost of goods sold will go wrong. If cost of goods sold goes wrong, then GP will go wrong. If GP goes wrong, NP goes wrong. If NP goes wrong, capital goes wrong. If capital goes wrong, everything's wrong. Sir, too fast, sir. We don't know COGS formula. What are you teaching us? Beda. Martogudi. Ignore this. Come to trading account. You know trading account? First one sleeping line. Then one standing line in between. That side of standing line is debtors. This side of standing line is creditors. And you will draw on amount column, one particulars column. Format is okay. Here you write on the debit side first item opening stock. After writing particulars amount, of course. Debit, credit also. Do you write opening stock? Very nice. After that, you write purchases less of purchase returns. Then you write sales less sales returns after direct expenses. Then you write closing stock. Then you find total on the credit side. That total you write on the debit side. Then you find gross profit as balancing figure. 1 second, final accounts rough anta pass aita. If in case you write your closing stock wrong, total will be wrong. If total is wrong, debit side total is wrong. If debit side total is wrong, gross profit is wrong. So all I'm trying to prove to you using this is inventory valuation has an impact on income determination. Inventory valuation has an impact on income determination. Wrong valuation of inventory will result in wrong income. Right valuation of inventory is crucial in identifying right amount of income. I hope you got it. Let's go forward. Let's take one simulated environment. Let's say opening stock is 10, purchases is 40, direct expense is 5, sales is 1 lakh, and closing stock is 25. Sir, what is it that we should do? This is all data given in the question. I would want you to help me determine my income. How much is income? Simple. Take the total on the credit side, 1 lakh 25. Write the same total on the debit side, 1 lakh 25. Now find gross profit as balancing figure. 40 plus 10, 50, 55. If you deduct 1 lakh 25 minus 10 minus 40 minus 5, what do you get? 75,000 is balancing. Sorry, 70,000 is balancing figure. Everyone understood 70? That abacusly one button was not working correctly. 70. Now let's play with closing stock. Shall we play with closing stock? I know the correct closing stock is 25. I know that the correct closing stock is incorrectly. Instead of 25, let's say I will take 30. What is the correct value of closing stock? 25. What is the correct GP? 70. But let's say I valued my closing stock wrongly. By some calculation error, by some valuation error, or intentionally, I have increased my inventory from 25 to 30. What would happen? Credit side total will no longer be 1 lakh 25. It will become 1 lakh plus 30, 1 lakh 30. Credit side total changed. Debit side total will become 1 lakh 30. Then what would be my GP? GP would no longer be 70. You will take 1 lakh 30 minus 55. What do you get? 75,000 is your gross profit. I increase my closing stock by 5. As a repercussion, that resulted in increase in my gross profit by 5,000. I increased my closing stock by 5,000. As a repercussion, it showed up on the credit side, it showed up on the debit side in my trading account by increasing my gross profit by 5,000. Everybody understood? Make some noise. Fantastic. So can I draw a conclusion that with increase in the closing stock by 5,000, my gross profit increased by 5,000. With increase in the closing stock by 5,000, my gross profit increased by, basically all that I'm trying to tell you is closing stock is an asset. When the asset increases, asset is debited, it will result in the credit, which is profit. Asset increases debit, credit resulting is profit. If you decrease the asset, it should decrease the profit. If you increase the asset, it should increase the profit. Are you getting it? Very nice. See, here's the conclusion that we just drew on that. Now, building on the same example, rather than taking 25 to 30 by increasing by 5, I'll take 25 to 20. I'll decrease my inventory by 20. Then what would happen? Credit side total 1 lakh plus 20, 1 lakh 20. Debit side will rate same 1 lakh 20. Now check 10 plus 40, 50. 50 plus 5, 55. 55 to be deducted from 1 lakh 20. What do we get? 65,000. So I just mentioned, no, if you increase the closing stock on the credit side by 5,000, gross profit will increase by 5,000. If you decrease the closing stock on the credit side by 5,000, gross profit will reduce by 5,000 on the debit side. I repeat, if you increase your closing stock on the credit side by 5,000, debit side GP will increase by 5. If you decrease your gross profit, if you decrease your closing stock by 5,000, your gross profit will reduce by 5. Increase GP, sorry, increase closing stock, increased GP. Decrease closing stock, decreased GP. Let me know if my conclusion is right. See this? I don't know if you're able to see now. Can you give me a check? Everybody is understood and clear till here? But actually, the story doesn't end here. Let's say you, after the class today, didn't go home straight. You went out to party, have fun. You had so much food outside that you went back home to not eat any food at home tonight. Then what will happen? They would have thought you would reach home no tonight. So they would have cooked dinner for you. That rice, whatever was cooked for you, you did not eat last night. Let's say you did this yesterday. Yesterday you did not go home for dinner, rice that was cooked to you, you did not eat. What will happen? This morning's breakfast will become chitrana. Why? Because yesterday you did not eat at home and that tanglana of last night became this morning's chitrana. Do you agree? Exactly like that. In the previous year, there is some closing stock that becomes current year's opening stock. Or in the current year, if you have closing stock, it will become next year's opening stock. Do you agree with me? 31st of March 2025's closing stock is 1st of April 2025's opening stock. Same concept if you remember in here. If in case you play with your closing stock last year by increasing or decreasing it, you are so happy. Yes, I can make more profit just by increasing closing stock. No, it's a trap. If in case you increase closing stock last year, that resulted in increased gross profit last year. That increased closing stock of last year will become increased opening stock of this year. And that will ensure that your profit goes down by the same extent. Let me explain. Take the same values 10,000, 45, 1 lakh, and 25. Last year, what did I do? I changed my closing stock by increasing it by 5. Let's say that way I'll change my opening stock by 5. Right now, how much is GP? 125 minus 125, you have 70. Instead of increasing my closing stock by 5,000, instead of increasing my closing stock by, if I increase my opening stock by 5, opening stock becomes 15. Now see what will be my GP. Credit side total 125 remains same. Deduct 15, 40 and 5 from the same. My GP became 65. So, previous year if I increase my closing stock, previous year GP increased by 5. Because I increased my closing stock last year, that has increased my opening stock this year by 5. And in the current year, if you increase opening stock by 5, gross profit will decrease by 5. So you cannot always increase the closing stock to increase profit. If you increase closing stock previous year profit will increase, but it will decrease current year profit. So it has an immediate consequence in the very next year. I hope you understood. Yes. Extension. Instead of making 10,000 of opening into 15, I'll transform 10,000 opening to 5. Credit side total 125. Take 125, deduct 5, 40 and 5. 5,000 opening stock, 40,000 purchases, 5,000 direct expense. Can I say 75,000 will be our gross profit? By this what happened? By decreasing my opening stock by 5, my gross profit increased by 5. By increasing my opening stock by 5, my gross profit decreased by 5. I'll repeat. When you increase closing stock, what will happen to GP? Increase. When you decrease closing stock, GP. When you increase opening stock, GP will decrease. When you decrease opening stock, understood? So, closing stock is like this and this. Opening stock is like this, then this. Guys, understand? It's working in a different way. Pakka? Does it make sense? Sir, how do we remember this for exam? Psych agidela. See this? See this? It will work like this. Sir, ಏನು ನೆನಪಿದೆ exam by the time we go only will remember chitrana, white rice and something this you told but we don't know which one. Shall I teach you a simple shortcut? Remember this? This was slightly far from this entire concept of valuation of inventory. Have you seen this movie? Yeah. May agar kahu this one? No. No, this song is May agar kahu. Oh, you put that haldi and all. No, not this song. That was this is Aankhon Mein Theory. Khume Teri, like full shirt and then her, all that. There's one more song in this movie. Do you remember? The title track. Om Shanti. You remember this song? What happens in this song, if you can recall? No. The song starts with only Shah Rukh Khan in it. 10 seconds into the song, there's one heroine. 5 more seconds into the song, one more heroine. Another 10 seconds, one more hero. By the end of the song, you have Salman Khan, Saif Ali Khan, Sanjay Dutt. So many people, no? The people keep coming, keep coming, keep coming. And heroines though, Rani Mukherjee, Preeti Zinta, Kajol, Juhi Chawla. Don't know. People, okay. They keep coming. Now, what I would want you to know is, in Om Shanti Om song, people keep coming. Do they come just like that? Call me out. ಮಗ ಒಂದು ಹಾರ್ಟ್ ಶೂಟಿಂಗ್ ಮಾಡ್ತಾ ಇದೀವಿ 10 seconds ಆದ್ಮೇಲೆ ನೀನು ಬಂದ್ಬಿಡು ಡಾನ್ಸ್ ಮಾಡು. Will they come? Do you think they would come that way? They show there that it's a party, they invite everyone come. No one comes free. Everyone will charge you for coming and dancing in that song. And let's say you are the producer of the movie. More actors you go on adding, no, more revenue you go on paying them. More money has to be paid to them. Do you agree with me? When you keep paying money like that, profit will decrease. I'll repeat. Om Shanti Om. More actors keep coming into the song, more payments have to be paid, and profit will decrease. Remember that. Om Shanti Om. OSO. People keep coming, higher payments, profit decrease. Read that. Higher payment to actors results in lesser profits. Same story. OSO means opening stock overvalued. When the opening stock is overvalued, profit will decrease. Let's change it. OSU, opening stock undervalued. Ulta. OSO, profit decrease. OSU, profit increase. Next one. CSO, closing stock overvalued. This is again profit will increase. Opposite of the first line. Last one. CSU, closing stock undervalued. Opposite ke opposite. Profit will decrease. So this is a simple shortcut that you can remember to understand whether the change in the inventory is impacting the profit in the increasing order or in the decreasing order. So ultimately, point number one in significance of inventory valuation is inventory valuation helps us determine income. Incorrect inventory valuation results in incorrect income, and right valuation of inventory will result in right valuation of income. So going back to the same point what we discussed earlier, determination of income. I hope everybody got it. Would you want to copy till here? Oh, right. Valuation of inventory. I didn't tell anything. What happened? Even I got scared. What happened? Someone was irritating someone and someone shouted. What was it? I don't know. No. Who? What is it? Proposal? Ah. Oh, what? What? How much of skill is spoken? Can't agree. Don't try to. This valuation representation in terms of money. Money. Can I show this side of the story? Inventory includes. What and all does inventory include? For the variants, everything. No? Yes. Oh. Oh. Mm, 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 mm. Can you see? Done. Can I show raw material at least done, no? Right? Work in progress and finished goods. Then write the next part. Value at which inventory is to be carried in financial statements. Value at which inventory is to be carried in financial statements. Value at which inventory will be carried in financial statements. That's what we do. Valuation of inventory, representation in terms of money for all of this, representing at what value, sorry, determining at what value should we be rating this in our financial statements. Then rate the heading as significance of inventory valuation. Significance of inventory valuation. Determination of income. Then write this part. Write this, just this. I'll tell you, not that. Write this. Closing stock increase, profit increase. Closing stock decrease, profit decrease. Closing stock, if it increases, profit increases. Closing stock, if it decreases, profit decreases. Done. Then write about the opening stock part. Can I show the opening stock part for you to write? Write this. Opening stock increases, profit decreases. Opening stock decreases, profit increases. So basically, closing stock is directly proportional, opening stock is inversely proportional. Closing stock is directly correlated to profit. Opening stock is indirectly correlated to or negatively correlated to profit. Correlation, no, not correlated, correlated, positively correlated, negatively correlated. Correlation, regression. Spearman's rank order correlation. Uh-huh. Hmm. Everybody's done? Nice. I don't understand why you guys are talking, huh? Next, after writing determination of income, the second point is ascertaining financial position. This inventory, whatever you compute, will not just impact the profit. Inventory is an asset. Asset has to be shown in balance sheet. When you show this asset in the balance sheet, it will impact your financial position. It will in fact impact computation of your net worth. If you write asset at a higher value, total on the asset side will become more, minus liabilities is your net worth. Or net worth can be found in two ways: total assets minus liabilities, or capital plus reserves. If you increase the value of inventory, total on the asset side will increase, liabilities after deduct will get more net worth. Or if you increase the value of inventory, it will result in profit which is sitting in reserves. So when you do capital plus reserves, will get more net worth. This is what people tend to do when they're trying to sell their business. To get higher valuation, to show higher net worth, they'll try to play with the inventory. So showing right value of inventory is crucial in determining correct financial position, and that will be impacted. Then whenever we valuing inventory, we should follow accounting standard 2 for valuation. This I am not telling. This is given by the Institute of Chartered Accountants of India, and it's also been made mandatory by Companies Act 2013 for corporates. For non-corporates, ICA is only making it mandatory. Meaning, whenever you want to value inventory, you know if you show higher value of inventory, you will get higher net worth. Just to ensure that people don't break that rule by showing higher value, just to ensure that everyone is in the same yardstick, accounting standard 2 will tell us how to value inventory, and all of us have to value the inventory as per accounting standard 2. And following accounting standards is mandatory for any company. Section 132, Section 133, Companies Act, we'll read it later. But for now, we'd have to follow accounting standard 2 for valuing your inventory, and that is the value at which you'll record it in your balance sheet, which will be later used in computing the net worth of an entity. The next point is statutory compliance. I told you just that's compulsory. You would have to comply. Accounting standard 2 wants us to value the inventory in a specific way. How does accounting standard 2 value wants us to value the inventory? It is an accounting policy. It will give us option. What is accounting policy? When you're moving from point A to point B, there are multiple ways to move. Whichever you choose to follow is your policy. Similarly, in the process of accounting, there are multiple options that will come across. Whichever option you pick to follow will become your policy. Accounting policies are principles and method of applying those accounting principles in preparation of financial statements. I'll ask you the same thing what I just taught you. Come on, boys and girls, answer this question. Is valuation of inventory an accounting policy or an accounting estimate? accounting policy. It is accounting policy. It's not an accounting estimate. So you have more than one option to value your inventory. And further, para 5 of AS2 says inventory should be valued at cost or NRV, whichever is less. And in determination of cost, you have options. Accounting policy comes in determining the cost of the inventory. Once you determine the cost of the inventory based on the accounting policy you pick, it has to be compared with net realizable value, and whichever is less will be the value at which inventory will be shown in our financial position. Now, why is it that we've been given an option to show it at cost or NRV, whichever is less? This is keeping in mind conservatism. This is keeping in mind conservatism. What does conservatism has to do with this? Very simple. I bought a piece of inventory for 100. I'm expecting it to sell it for 120. What is the price at which I bought? 100. What is the price at which I'm expecting to sell? That 120 will become realizable value. What is 120? To sell it at 120, do I have to incur some expense? Do I have to pay some commission? Do I have to pay some brokerage? Do I have to pay some transportation charges? If in case I have to pay any, I will deduct. For now, for our simplicity, let's assume zero selling expenses. 120 rupees is not sale price, it is expected sale price. That is considered as NRV, net realizable value. I bought it at what price? 100. My cost is 100. I am expecting to sell it at 120. Will I make profit or loss? How much profit? Don't book it right now. Wait for sale. You sold it in next month or you sold it in next year, record profit in next month or next year. Not now. Now, inventory has to be recorded 100. Why? Cost is 100, NRV is 120, whichever is less is cost. In a different scenario, let's say the inventory's cost is 100. I am expecting to sell it at 90. What is the expected selling price? Let's say I'm expecting to sell it at 95, 5 rupees, there is commission that I need to pay. So if I sell, I'll get 95, 5 rupees I'll pay commission. Net realizable value, that is sale price minus selling expense, is 90. So 100 rupees is my cost. If I sell, I'll get 90. When I sell, I make loss of 10. Everyone understands that I'll make loss of 10. Have I sold it? No, 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 no. When I sell in the future, I will make loss of. Conservatism says if you expect loss in the future, don't wait for future to cry. Cry today. Cry today for tomorrow's problems. Laugh tomorrow for tomorrow's happiness. Cry today for tomorrow's problem. Tomorrow when you sell, tomorrow as in someday in the future, you'll make loss no of 10 rupees when you sell. Don't wait for that day. Book your loss today. How to book your loss today? You purchased inventory for 100. Don't read it at 100 in your closing stock. You record it at 90. When you reduce your closing stock by 10, profit reduces by 10. Conservatism convention. That's how we apply cost or NRV, whichever is less. I hope you understood. Who's asking us to value the inventory at cost or NRV, whichever is less? Accounting Standard 2, paragraph 5. Accounting Standard 2, paragraph. This cost or NRV, whichever is less, has to be applied item wise. It has to be applied. Let's say I have inventory item A, B, C, D, E. All the 5 items cost is available, NRV is available. So let take total cost of A, B, C, D, E, total NRV of A, B, C, D, E, whichever is less. No, no, no. A's cost, A's NRV, whichever is less. B's cost, B's NRV, whichever is less. C's cost, C's NRV, whichever is less. D's cost, D's NRV, whichever is less. E's cost, E's NRV, whichever is less. Then take total of whichever is less, whichever is less, whichever is less, whichever is less, whichever is less. That becomes my inventory closing. Are you getting it? I hope you understood. We'll do questions on this later to get the practical part of this. We'll also understand what does cost include, what does NRV include, what does it not include, and several things. But please do copy this part now quick. And I would want you to copy the last point. ಎಲ್ಲ ಆಮೇಲೆ ಹೇಳ್ತೀನಿ. Liquidity analysis. That's the fourth point. Significance of inventory valuation, determination of income, ascertaining financial position, statutory compliance, and liquidity analysis. Liquidity analysis. Write all 4 points. Are you guys done? Okay. Now write this sub point. How to ascertain the value of inventory. This is specified in Accounting Standard 2 issued by ICI. How to ascertain the value of inventory? Specified in AS2 valuation of inventory as given by ICI. Accounting Standard 2. Done? Everybody? Now also write this part. Don't write boys and girls answer this question. Write valuation of inventory is an accounting policy and then write its stage. I hope you wrote this. Whichever is less to be applied item wise and not in total. Nice. If you have written that, I think we are good. We need to do a lot of other problems and concepts on this topic of inventory valuation. What we've done is just the introduction part of it. Wait for tomorrow's class as we open the Pandora's box and see what else is there in the topic of valuation of inventory.